Focus on the metal space, which has been one of the top performers this year. Nifty Metal Index delivered nearly 24% returns. But the recent development, government has confirmed a 3-year safeguard duty on steel imports to protect domestic producers. To talk about this in detail, we're joined now by Ravi Uppal, Chairman of Syscol and former MD and Group CEO of JSPL, and Rakesh Arora, founder of GoIndiaStocks.com. Welcome to both of you, and thank you so much for speaking with us today. Mr. Uppal, I'm going to begin with you, and just to get a context of why these safeguard duties were crucial from the perspective of the Indian steel industry.
Fortunately, the capacity of the Indian steel industry continues to grow. And we have, as of now, a total installed capacity of about 210 million tons. And this is going to go to 300 million tons in the next 5 years. And that makes India the second largest producer of steel. Our own consumption is about 168 million tons right now, and it must grow. So if the capacity is growing, so must be the demand. And therefore, and we know that the largest producer of steel in the world is China, whose installed capacity is about 1 billion ton. Their own demand, is somewhat in recession, but they're putting a lot of thrust on export. And China is also trying to reduce its own installed capacity by phasing out the old units. They're trying to sort of modernize the steel industry, but they have reduced their capacity by about 4% this year. But they have launched a big thrust in export, and this year their exports are going to touch 100 million ton, which is more than the total production of United States, Japan, Korea, all these countries. So since they are putting a lot of thrust on exports, they could also be targeting in the Indian market. So therefore, it stands to reason that we must offer required protection to the steel against any dumping by China or any other countries. So I think the government basically is very mindful about the potential of steel industry for the Indian economy, which nearly contributes about 2.8% to the GDP.
Sure.
And huge multiplier impact on the economy. Yeah. So I think the duty imposition for a limited period, I think, is very much in order. And on one hand, we have to stimulate the demand through our own infrastructure projects, industrial projects. At the same time, we should make sure that we don't become vulnerable to the dumping by China.
Sure. So from the Indian steel industry, of course, it's a positive, and we're seeing that impact on the stocks. Rakesh Arora, just a quick word on, which of the companies, listed players, will benefit the most and the kind of boost we're seeing. I mean, some of those companies about 3.5–4% up in morning trade. Do you see this as a real benefit to them accruing over the next 3 years?
So I think this confirmation of safeguard duty could not have come at a better time than now. We were expecting it for some time and it got delayed. So there was some doubts creeping in whether the government really wants to confirm it or not. So at least that is put to rest. Now, costs have been also going up. Coking coal prices are up around, $40 from their bottom. And that is impacting the steel margins. So for Q3, I'm expecting that steel companies will see a drop of around 2,000 rupees per ton in the EBITDA per ton margin. So this is a kind of a relief which has come in. Steel companies are already in process of increasing steel prices. So I'm hopeful that in Q4 we'll see more steel prices, price increases to come through. And that should benefit most of the large listed companies, specifically in the flat space.
So flat steel is what you're talking about, Rakesh. In fact, Mr. Uppal, let me come to you. This is Hiral on this side. Taking your expertise into consideration as well, if you have to look at the strategic and the global supply chain, capacity versus actual supply. We're talking about China, which has actually gone ahead and announced significant production cuts. If you talk about November, their production was down about around 8 to 10%. December, it seems, has been trending lower. It's going to be interesting to see what that 2025 number looks like. Now, with this, do you think this will lead to a genuine reduction when it comes to global surplus, or will export volumes remain high on the back of the domestic real estate slump that they're already seeing? Because this then will tell us what's the impact that Indian players could actually see.
I think one thing I should point out that China, because of a little bit of recession in their own economy, they are not able to do enough production to meet met by the domestic demand. They are launching a big aggression in the export market because we also come face to face with them, and so do the other major producers of steel from India. So I think that India's own exports, if you look at the numbers, have not increased. To the contrary, they have come down. And India's only saving grace is a very buoyant domestic market. This year alone, India's total domestic consumption growing by 9% is going to touch nearly 161 million ton. I think that's a saving grace. No, now, but this whole thing can become a shattered dream if we open our borders to imports from China. And therefore, it's very, very critical that we have some kind of safeguard duty, which is what government has done in their wisdom. And India is a long story as far as steel is concerned. We are the second largest producer right now, a distant second largest producer. And, guided by the National Steel Policy, we are all set to reach about 300 million tons by 2030. So this story must continue, and any kind of short-term threats which come our way, we have to handle them. So, so that it doesn't become a kind of checkered journey. So we have everything going for us. We got all the raw materials, we got everything which is required, including energy today, to produce more and more steel. And I would envision that by about 2040, India's total steel production capacity will touch about 400 million ton. I want to mention one point. While we talk about the big numbers here, we should not forget that our per capita steel consumption is still abysmally low. It is less than 110 kg per year compared to world average, which is 215 kg. And look at the country like Korea and Japan, which are more than 600 kg. So we have a lot of headroom to grow. It is just that we have to go on with the execution of the infra projects. The industry must grow, and also civil construction, including residential accommodation and high-rise building. That story must go on. I'm happy to tell you that India's, the demand for steel right now grows at 9%, which is a very positive thing. So this is one industry which has got a very assured demand, and it can grow for the next 1 decade without any worries.
Okay. Rakesh, good morning to you, Neeraj here. And while the last 2 months have shown that the world is very constructive base metals and base metal stocks, the yuan appreciation, lower Chinese production numbers, and this safeguard duty mean that steel is entering the final lap of 2025 with its head held high, right? The question is, will 2026 be more of the same, both for ferrous and non-ferrous?
See, definitely steel is the cheapest metal right now when you compare to aluminum or other metal substitutes which are available. So definitely there will be substitution into steel happening over 2026. So that is going to help boost demand. But I don't think China's exports are going to slow down. And India has been increasing capacity quite significantly. So in the last 4-5 years, India has been increasing capacity at between 9 to 10% per annum, and demand has been growing at 6 to 7. So that's why we have a little bit of oversupply, and that's why, despite the safeguard duty, our prices are trading at a discount. Will this change in 2026? Maybe we'll narrow down the discount. So steel would have more legs. I think coming to aluminum, I think all eyes would be on China. Whether they allow for new aluminum capacities to come up. There's already some chatter that they will allow new aluminum capacities to come up along with renewable energy. So if that were to happen, I think aluminum would have kind of peaked out at the current levels. So it could be a good idea to switch out of aluminum stocks into steel stocks.
Okay. Gentlemen, to both of you, a very happy year-ender and a fabulous 2026. And thank you for taking the time out on the last day of the year to talk about arguably the most important news development in the last